Hello, Teresa Grant here, teaching financial coaching, coming to you in another video to talk about what? One of the things that you work so hard for every day, your money. I talk about the 5 actions that you can take with money. So 1, earn money, give money, save money, spend money, invest money. And typically I talk about how important it is to manage money, but in order to have money to manage, you have to earn some money. So in this video, I want to talk about one of the things that you do, one of the first things that you do when you become an employee and you are ready or you're about to earn money. You have to complete what they call a W-4 form. And basically the W-4 form is used to determine how much federal taxes will be withheld from your paycheck based on the information that you provide on the W-4 form that you turn into your employer. So today I just want to kind of dive into the changes that happened with the W-4 form in 2020, why they made those changes, how it's supposed to be easier. And then we'll actually kind of walk through a W-4 form. And then also the IRS has this handy dandy little deductions calculator that you can use if you're someone that itemizes your taxes, because the whole idea is you want to not owe the IRS for one, and then also you don't want to get a huge refund, because basically a huge refund just says you let the IRS hold too much of your money all year. Now they're going to give you some back, and hopefully they're giving you back what you deserve, but that depends on how you how many deductions you have, or if you're able to do itemized deductions as opposed to the standard deduction. So ideally you want to try to break even, and with the changes of the form in 2022, it's supposed to help you be able to do that. So ideally you don't want to get a refund and you don't want to owe them either. That's the ideal situation, but it can be kind of tricky to, break even. So anyways, we're just going to walk through. Of course, if you start a new job, you always have to fill out a W-4. But as an employee, if you've worked somewhere for 20 years, you can update your W-4 every year if you like. Okay, so yeah, let's get into it and see what the changes are, and hopefully this will be helpful walking through this so you can understand what some of the information they're asking you for, what it pertains to when it comes to the IRS withholding taxes and what you owe or what you get back when you file your taxes for the end of the year. We have the W-4, Employee Withholding Certificate. This is the 2022 version. Step 1, pretty self-explanatory. Your personal information, first name, last name, social security number, address, city, state, town, city, or town, state, zip code. And then it tells you to make sure you verify that your name and social security card, the name on the social security card matches whatever you put on this W-4 withholding certificate. It says complete step 2 through 4 only if they apply to you. Otherwise, skip to step 5. It says refer to page 2. We're not going to go there. So step 2, if you have multiple jobs or your spouse works, then you want to complete this step. So basically it says complete this step if you, 1, hold more than one job at a time, or 2, are married filing jointly and your spouse also works. The correct amount of withholdings depend on income earned from all these jobs. So it says do only one of the following. So 1, you can use the estimator for the most accurate withholding for this step, or you can use the multiple job worksheet on page 3 and enter the results in step 4C below for roughly accurate withholding. And then see if there are only two jobs total, you may check this box. Do the same on the W-4 for the other job. And then it specifies that this option is only accurate for jobs with similar pay. Otherwise, more taxes than necessary may be held. So when they say similar jobs with accurate pay, basically saying, you know, if you're making about the same amount of money on both jobs, or in, you know, in this case, if you and your spouse make about the same amount of money, then you could just check that box and make it a little easier. But again, they give you options to use the estimator, and we may get an opportunity to jump into the estimator to see how much more accurate it is. All right, so step 3 through 4, and you only want to do a W-4 for one of these jobs, it says. So if your total income would be $200,000 or less, $400,000 or less of married, filing jointly, and you are claiming dependents, you want to multiply the number of qualifying children under age 17 by 2,000. So if you have 3 kids, you know this is going to be $6,000. And say you have, I don't know, a student in college or a couple of kids in college. So let's say 2, then you know that's going to be $1,000 here. Then it tells you to add this amount and enter the total here. So in this case, it's $7,000. All right, so now you know, and then in this case, we're going to say, let's just do this box for this one, just for illustration purposes. Want to make sure we're completing all the information. All right, so in this case, since we chose head of household, and then saying we have 2 jobs. So we head of household, we got 2 jobs, we have 5 kids. 3 of them under 17 and 2 in college. We having to work a whole lot. All right, so then this is optional. This is optional, and again, this section is more detailed, especially if you know you're going to itemize on your taxes. If you normally itemize and say your itemized deductions are more than the standard deductions, then you want to complete this section. But if you know in the past and you predict that this year your itemized deductions are not going to be more than the standard deductions, then basically you can skip this section. You go down, complete your signature, and then your employer will complete this information, and it's a done deal. But let's just look. We'll see on page 2. And this is one of the things that I like to do. I typically like to read the instructions before I start completing the information. I'm not sure what happened. Read the instructions before I start completing the information. And this just basically walks you through every block up top. The purpose of the form, why you're completing the information. And again, all of this can be found at irs.gov. Publications, W-4. You could just do a search on a W-4 on Google, and it'll take you to this. So up top, it mentioned in step 2 about the worksheet that if you have 2 jobs, typically it tells you to fill out everything pertaining to the higher paying job to ensure that you're having the right amount of taxes withheld. So this is the worksheet that you would use. This is the worksheet that was for step 2. This is the worksheet that you will use for step 4 in the event that you, like I said, if you typically itemize, and then it gives you some of the deductions that you may have for itemizing, which home mortgage interest, charitable contributions, state and local taxes, which that is capped at $10,000, and then medical expenses in excess of 7.5% of your income. So say you make $100,000 a year. You will not be able to deduct the medical expenses unless you pay out of pocket more than $7,500. So say you pay $9,000 out of pocket medical expenses. You'll only be able to deduct the $1,500 because that's above and beyond the 7.5% of your income. And that's just an easy number. Of course, you and your CPA would calculate it, or once they punch it in, it'll, you know, whatever the software is will calculate what's above and beyond the 7.5%. If it's not more than 7.5% of your income, then basically you will not be getting the deductions for the medical expenses. However, in one of my other videos, you may be able to deduct mileage deductions. So I'll put a link to that video in the description box. So basically, you go through that. It tells you to enter what the standard deduction is for 2022. If you're married filing jointly or qualifying widower, the standard deduction is $25,900. If you're head of household, the standard deduction is $19,400. And if you're single or married filing separately, the standard deduction is $12,950. So basically what it says is if line 1 is greater than line 2, then more than likely you will be able to take your itemized deductions. If line 2 is greater, then basically all of line 1 is null and void, and it will be recommended that you take the standard deduction. And then, of course, if you're taking the standard deduction, this line 3 will be 0. If line 1 is more, then you subtract line 2 from line 1, and then line 3 will be whatever the difference is. All right, so this is actually the worksheet you would use that it referenced in step 2, item B. And you actually use these values to calculate how much you would enter on in step 4, line C, which is your extra withholdings. Let me show you what I'm talking about. So right here, step 2, B, you will use the worksheet that I showed you down below, and then the results from the worksheet, you'll actually enter those into step 4, item C, which is extra withholdings. So basically it's telling the IRS, hold out this much in addition to what I'm already having deducted, so that you don't end up having a tax bill at the end of the year. So extra withholdings, and that's calculated, again, that's calculated from this worksheet here. And if in our example, we did head of household, but right here you'll see first you determine which worksheet you're going to use based on your filing status. So if you're married filing jointly, qualifying widow, you will use this worksheet. And basically you're reading it going down the left column and then over to the right to match it. So you start with your highest paying job. So say you have a job making between 100,000 and a little under 150,000, and then you have a second job where you're making 20,000 but less than 30,000. So right there, you would want them to withhold an additional $6,010 so that you're not having a tax bill at the end of the year. But like I said, you use the charts that relevant to the filing status that you have on that you chose on the W-4 above. And then, like I said, in our example, we had head of household. So in the head of household example, you can make a little bit more. They're calculated a little bit differently. So head of household, we have 125,000, but less than 150,000. Then we'll use the same example for our second job, and you would actually have them withhold $5,930. So again, this is page 4 charts. You would use those if you chose to do option B in step 2. In step 2, if you chose to do option B, you would use those values from page 4 below to enter the results here for extra withholdings. Okay. Alrighty, so the next thing we'll do is, as a little bonus, we'll actually go, as I mentioned here, they have an estimator that you can use to kind of estimate for the most accurate withholdings. Okay, so this is the tool that was referenced in step 2, letter A, the handy dandy tax withholding estimator tool that you can use This was the first option. They said this one was more accurate, and basically you go in and enter some of your information. It gives you an idea of what your tax refund is going to be based on the information that you enter. And with that information, then you can go back and make the adjustments on your W-4 form. So as you see right here, it says the tax withholding estimator. Like I said, this was referenced in the beginning when we did when we went through the W-4 form. It is step 2, item A. And it says use your best estimates for the year ahead to determine how to complete Form W-4 so you don't have too much or too little federal income tax withheld. So of course it starts with about you. And again, in this example, or in the example for the W-4, we chose head of household. Do you or will you have a job that regularly withholds federal income taxes from your paycheck? The answer is yes. And then you just walk through the questions. Select any that apply. I will be 65 or older. I am blind. I am claimed as dependent on someone else's tax return, or I plan to claim dependence on my tax return. And as you know, we do plan to claim dependence because in our example, we had 5 kids. And then it tells you that you'll have to enter some information about those kids later on in the app. So we click that, then next. Then it asks you about the income and the withholding. So in this case, we're going to just say we have one job, because how many jobs will you have this year in which federal income tax will be regularly withheld? So in this case, we're going to say 1, your first income source, and it's going to be a salary position. Select what best describes when you earn income from this job. Of course, we earn it all year, so we'll say January 1st to December 31st. And how frequently you're paid. Okay, we're gonna say once a month. And it'll say looking at your most recent pay stub, when did your most recent pay period end? So we're right in the beginning of August, almost in the middle. So we're gonna say if it was monthly and you're paid for the prior month, we'll say the pay period ended July 31st. For easy numbers, we'll say it was $5,000. Whoops, 5,000. So year to date, then that would be $40,000. Then it just tells you based on the information provided, it looks like you're expecting annual income of about $65,000. Technically, that's about $5,000 off, but that's based on the information that we enter here and take into account that we actually hadn't got paid for August. So, but here is, okay. So we'll just say yes. Okay, enter the federal taxes that are paid per pay period. So we're gonna go on the low side and say we pay $200 a month for federal taxes. Federal taxes paid year to date. Of course, if it's been 8 months, we'll say $1,600. This person does contribute to a 401k. The amount per pay period, we're a bit robust, so we're contributing the max. We're contributing 15%. So that's $750 per pay period, which year to date means you contributed $6,000. You're getting a bonus. We're gonna say yes. Not as much as we like, but hey, $1,500 bonus. And then we'll say we don't have any other sources of income. Next. We do have student loan interest deductions, and we have more than that, but in this case, it's capped at $2,500. And one of the good things about student loan interest is it's dollar for dollar deduction. So it deducts the full $2,500 from your actual income that you earn. Whereas when you do deductions for like your home mortgage interest, that's only a percentage that you're able to deduct. But student loan interest, dollar for dollar deduction. And you will hear people say it's an above the line deduction, means it's above the adjusted gross income line, which means you get dollar for dollar deductions for that interest. Student loan interest, we say yes. And what else here? None of those other things. So we'll go next. Hold on a second. I want to say we should have had an option. Oh, here we go. Deductions for contributions to IRA. So we are going to take advantage of this, which means we can have your separate IRA outside of your company's retirement plan. And then, of course, for 2022, the max that you can contribute to an IRA is $7,000. But in our case, we're just going to contribute $2,000 this year, just so that we do try to have another. And the IRA contribution is also a dollar for dollar deduction, which is considered above the line, which means it's deducted from the money you earned. Dollar for dollar is deducted from the money you earned before your adjusted gross income is calculated. All right, so adjustments total $4,500. That's $2,500 student loan interest, $2,000 for a separate IRA that you open outside of your job. All right, so now it talks about deductions. So in this case, based on what we've entered, if we were to itemize, it would not be more than the standard deduction of $19,400. So it's recommended that you take the standard deduction, which we will. All righty. So then it says select itemized deductions that may apply. We're not, because it looks like we may not have enough. So we'll just go with the standard deductions and see what the tool tells us, just to make it easy for this example. All right, so then it talks about tax credits. So of course it says enter the age of the child will be on December 31st. So of course, you know, we had 5 kids. So the first kid is 5. Let's say second kid is 8. Next kid is 11. Then we had the 2 in college. So we say 19 and a 21-year-old. One is just getting in, one is about to come out. So then it talks about the child and dependent care credit. So this is basically the funds or the money that you pay for daycare. And we have 3 kids that are daycare age. So we'll say 3 here. And this is for the example that we use. And then enter the amount of qualified work-related child care expenses. So basically that's just saying, how much did you have to pay for daycare services in order for you to go to work? And one other thing I want to point out, whenever you see this question mark here, then it gives you, you can click on it, it'll explain what it's asking you for and also provide you links to other information that can further explain it. And so as you can see here, the total expenses you may calculate, but you, regardless of how much you paid, it's going to be a cap on how much you can how much you'll be able to deduct or how much of the deduction that you'll receive. So right here it says 6,000 or whatever for 2 kids, even though we've already paid like $12,000. So again, that was my example, like with the student loan interest and the IRA contributions, that's dollar for dollar. Like you get you're allotted the full $4,500 is deducted from the money that you earned. But you can see here, childcare expenses, even though you paid out of pocket $12,000, you're only going to be able to deduct, or they're only going to give you credit for $6,000. And again, if you only had 1 child, it would only be $3,000. But this is another credit that, you know, based on your income, you may be able to earn income for those 3 kids that are under, that were 5, 8, and 11. So we're going to say 3 here. And again, you can always click on the question mark and it'll explain to you what it is that they're asking for and how it's a benefit. We didn't adopt any kids. We already have enough already. None of these things apply in our example, but of course you want to go through those if any of them apply to you. Okay, next. Okay, so based on what we entered, it gives you the results. So right here, you can see based on the deductions that we have, mainly because we had 5 kids, and our annual income is not very high. So that earned income credit helps us quite a bit. So it looks like based on what we entered for our example, you would actually get a tax refund of $6,800. Of course, this is only an example. I use simple numbers. You would have to go in and plug in your exact numbers to kind of get an idea of what your refund would look like. And then, like I said, if you feel like the refund is going to be big, but you want to get more of your money during the year, then that's where you want to go and make those adjustments on that W-4 form so that you can bring more money home as opposed to have the IRS withhold too much money and then you end up with a large refund at the end of the year. Okay, great. Again, this is the app that was referenced on your W-4 form, step 2, item A. All right, so you can see it gives you a breakdown and walks you through the steps. Again, hope this was helpful.